Hey, this is Danielle. Welcome to this week's edition of Dear Simpler. So, I've gotten a lot of questions about what pinning means, especially because last week was options expiration. That's typically a time that we look for a pinning play. So, first of all, I'm not the biggest fan of pinning plays because I prefer directional trades, but I will throw some on here and there. And Amazon seems to be a really good one for whatever reason. I don't know why. The forces at B like to trade it to a certain number. Um, but what pinning means is basically it closes right around a specific psychological value. And in this case, this one's closing at 1950.63. So, no, it's not closing at 1950.00, even though I have seen that happen before. It's pretty crazy, but it's, 63 cents off. So let's take that, right? In this instance, what I was looking for in Amazon was a run up into earnings to the 1950 price point. So if you look at Amazon, on a lower time frame chart, we had a 30-minute squeeze. So as you all know, I love Fibonacci's and I also love Amazon. So one thing that I was looking for here, and we might be able to see it a little bit better on the 15-minute, just because that chart's that is a little bit funky. There we go. So one thing that I was looking for here was this 30-minute squeeze. I was looking for a 30-minute squeeze to take off and send this into the Fibonacci extension directly before the earnings report. Now, in this instance, I was a little bit wrong, and this is a good example of times where you can be wrong and still make money, which is always awesome. Because as you can see, the squeeze did not fire prior to the report. It stayed in consolidation. Amazon actually fell going into the report. It actually fell after the report, but then you got a slingshot squeeze. Okay, you got a slingshot squeeze that came through. You have downward momentum that flipped around, turned higher, and it came directly to the Fibonacci extension target within 15 cents of that target, passing right through it. And you can see how it paused right there. I mean, for people who say that Fibonacci is voodoo, I mean, whatever. I don't care. You can say whatever you want. I know that it works. I use it every single day. And I think this is probably one of the best examples that I've had. So for me, one strategy that I've been working on is placing butterflies at fib extensions that are also key psychological values that fit in with my other trade parameters. So that's what I did. Additionally, you know what this one had is it had very high open interest. So when you're looking at your volume and you're looking at your open interest, what you're looking for is you're looking for a strike that has very high open interest, a lot more than the other strikes. You want it to be about 3 times. So if your other strikes have 5,000, yeah, this one had 9,000, but that one was also a key psychological value. This one really stands out. And the reason why I picked it was because it overlapped with that 1272 extension. So, looking at all that, that made 1950 a pretty good spot for a target. So looking at the butterfly, what I ended up doing was I put on this butterfly prior to the report because I was looking for a run into earnings. Now I normally don't hold a butterfly through earnings or anything through earnings, but in this instance, I think this one only cost me about $1.43 or so. So that's $143 for the cost. And when Amazon did not move prior to the report, I said, all right, well, I'm just going to hold it and I'm going to see, what happens after the report. Normally, we don't ever advocate to do that, but it was such a low price. I thought, there's a potential that it might go to 1950 the next day after earnings. So that's what I ended up doing. So what did it do? Well, here you go. Here's your 1950 price point. I put the butterfly. This was a 1-2-1 butterfly. So that means I was short these 1950 calls. I was long the 1930s and I was long the 1970s. So what happens is you make money on the long call, and then you're making money on this short call because the price is staying below 1950. Now with it right there, right above 1950, I mean, it's fine. It's not really a big deal. As you can see, the P&L on the day was 1407. So I only paid like $1.43 for this. And then, let's see what I closed it at. So the closing price on this was 1650. So, I mean, it's a pretty solid move there. So, whenever anybody asks about pinning, I'll tell you I'm really not the biggest fan of pinning, but when they work, they are so amazing. So, those are all the factors that I look at. Those are all the reasons why I put on the trade. I'm not making this video to brag. I'm making this video because everything came together here. And it's just as important to study the trades that actually work and the ones that work out perfectly as it is to study the trades that you completely eat it on. Because there's really everything is a learning experience. And so you have to go back and learn from this. And when you get a perfect pin like that, you have to go back and, the next week you say, all right, well, how can I set that up in a similar way? Nothing in that market ever happens twice the exact same way. But if you look for those same confluence of factors and get better at your pinning, then, it's just another trading skill that you can learn. So, thank you for your questions. For those of you who are coming to us on YouTube, if you're interested in Simpler Foundation, you can go ahead and check out www.simplerfoundation.com. And for those of you who are members, thank you so much. We appreciate you, and I'll see you in the next episode. Let me know if you have any more questions. Go to your Dear Simpler in your dashboard, send me a question, and I will send you back a video response. Thank you so much. Have a great weekend, and I'll see you in the next one.